Hello, everybody, and welcome to the UK Mortgage Market Insights for the week ending the 24th of November 2023. I hope I find you all well. As always, in this week's episode, we're going to be looking at the most up to date swap rate chart. We're going to be taking a look at which lenders have reduced mortgage rates this week. We're also going to be taking a look at Jeremy Hunt's budget statement, the Ofgem energy price cap statement, and also just want to touch on what that potentially means for mortgage rates. So let's get straight on with it. So first up, why don't we take a look at the budget statement? So on Wednesday, the 22nd of November, Jeremy Hunt stood in Parliament and announced what plans he had for the future of British people and the British economy. There was some huge expectations that he was going to do something to potentially boost the mortgage and property market. And if you recall from last week's video, I was saying that I don't think he should necessarily do that. Far too long, the British property market has been overinflated with incentives and things because it always seems that the go-to plan for the government is to try and do something to boost the housing market. So surprisingly, he actually didn't do anything at all really for the property and housing markets. Only just a couple of things that he did, but nothing major. There were no stamp duty changes or anything like that that was widely expected. So the only couple of things that he really did was he extended the mortgage guarantee scheme. It's basically a bit of an incentive for lenders to provide 95% mortgages. But to be absolutely clear, I don't really think this has done much anyway because we've already got lenders happy to lend at 95% loan to value. So I don't really benefit that holds at all. The only other major thing that affected the housing market was some planning reform. So essentially, he's basically made it much easier if you own a house, for example, and you wanted to convert that house into two flats. And then he basically said the local government will be able to process those planning applications much quicker. Yes, this is good news for property developers, but apart from that, it's not really going to do much. And how is it going to solve the housing crisis? Does he really think that turning one house into two flats is going to solve the problem of the housing crisis? The only other couple of things that are really going to affect people's pockets was the changes to national insurance. So employees' national insurance rate is going to be cut by 2%. And for the self-employed, Class 2 national insurance has been removed and Class 4 national insurance has been reduced from 9% down to 8%. So a little bit of saving for people that are in work. And of course, he also increased the national minimum wage. So from April next year, this is going up by £1 and 2 pence per hour to £11.44. So for anyone that's on the minimum wage, that's great news. It is going to make more money in there. Other than that, though, not a huge amount of changes. Really, everybody in the property industry just felt a bit disheartened by it. And to be absolutely honest, the end result is, despite the fact that he's made tax cuts, we are actually still paying more tax than we were previously. But you never know, they might come up with some wonderful plans in the spring budget next year. So next, I'd just like to take a very, very quick look at the lenders that have been reducing rates this week. So it's been a common theme of late that we are seeing lenders reducing their rates. That's been because of positive news on swap rates. So this week, the lenders that have reduced their rates would be as follows: Halifax, Foundation Home Loans, Precise Mortgages, Aldermore, Coventry, The Mortgage Works, Generation Home, Santander, NatWest, HSBC, TSB, Virgin, West Brom, Lendinvest, Hudson Bank, Nationwide, Leeds Building Society, and West One. There have been a few more smaller ones in there, but those are the main ones of note. Pretty much all the lenders reducing their rates across the board, covering both residential mortgages, buy-to-let mortgages, and even existing customers who want to just switch rates or even borrow additional money from their lenders. A wide range of rate reductions across. So next, I'd like to just take a brief look at the energy announcement that came from Ofgem. So they made the announcement that the first quarter of next year is going to see an increase in the energy price, and it's going up by 5%. So for most people that have dual fuel, this is essentially going to mean that that results in an increase of £94 per year. Now, let's not forget, this only covers the first quarter of next year. That's the winter period, and that's the time when darkest nights, so we need to use our lights, and it's also the coldest months, so we need to have the heating on. So this is going to have a huge impact on people. And whilst £94 over the course of the year doesn't feel like it can be an awful lot, if you haven't got that money, then that's a huge amount of money to actually find. We were asked for our commentary on this, and as you can see from the article on screen, if you're watching this, we basically said that this could cause a little bit of concern. And whilst the budget has meant that people are going to be saving a little bit of money from their insurance and maybe those that are on the minimum wage, in actual fact, most of your money that you've been saving is now going to be taken up by increased energy costs, amongst other things, because there's also potential for it to have an impact on fuel prices as well. So not great news going into the winter months. Know that it's going to be cold and dark. I'm going to have to use more energy, and that energy is going to come at a higher cost. So that then brings me nicely onto a look at the latest swap rate chart from yesterday evening at 10:30, and we were watching this closely, following both the budget statement and also the announcement from Ofgem. And I have to say, not great news there, because as you can see from looking at the chart, if you look from the 22nd of November, which was where the budget statement was, and then the Ofgem announcement happened, you can see that if you look at the current column, the swap rates have actually increased, and this isn't good news. Now, we have seen lenders reducing rates of late because there's been a bit more of a stability feeding in the economy, inflation dropping and things improving. But it just goes to show that the slightest little change and the slightest little bit of not so great news can have a massive impact. So whilst we are still seeing lenders reducing their rates, this increase in swap rates could mean that those rate reductions come to a halt and potentially rates could go up again. So you just never ever know what's around the corner. And that's why we always try to give you as much information as possible to make sure that you are best prepared if you're looking for a mortgage. So following on from this, I just want to touch on the subject of people that need to remortgage. Over the course of the next year, there's more than 1.4 million people going to be coming off these historically low rates and moving on to what we are now seeing as higher rates and potentially the new normal. So you'll often hear mortgage brokers say to you, when it gets to the point where you're just 6 months before your fixed rate is going to expire, get in touch and let's start looking at your options. This recent change to the swap rate because of an energy price announcement is exactly why we say to do that. Because you've got to look at it like this. When we as brokers have that conversation with you, we assess your circumstances and then we go out, we look at the market, we look at your existing lender, and we compare your existing lender's offerings to the rest of the market. We find the best mortgage rate for you. And then we ask you to apply as soon as possible. Because if you can apply and secure your interest rate on that day, that's great news. If, as we've just seen, swap rates increase and then lender pricing increases, it's not going to affect you because you've locked in on your rate. If, however, rates continue to reduce, all brokers will then continuously monitor the market for you and they will be in touch if the lenders reduce their rates and there is a better product available for you. We can switch you over to that new product. So that's why we say to you, please get in touch when you're 6 months away from your fixed rate expiry, because that's the best time for us to look at your options and just get you something secured. And that's it. Brings us to the end of this week's episode. So obviously, thank you for tuning in and thank you for watching. As always, I really do appreciate your support. As you know, this is just a very brief weekly summary because the key happenings in the mortgage and property market from the previous week. If you've got any questions that you want to ask, if you're specifically applying for a mortgage or you're thinking about doing so, you've got any questions that you might feel that you need to ask, twice a week on TikTok, I do a live stream on either a Monday and a Wednesday or a Tuesday and a Thursday. That's something that interests you. You've got the opportunity for a good couple of hours twice a week to ask me any question, any concerns, anything that you want to know about the mortgage or property market. I'll be there to answer those questions for you. So that's on a Monday and a Wednesday or a Tuesday and a Thursday. If you go to my profile, click on my beacons link. There's a link to all of my social media platforms and you'll find in there the TikTok one. If you go follow me, you'll get notified at the point when I'm going live and then you can jump on and you can ask me any questions. In the meantime, thanks again for watching. I really do appreciate your support. I hope you all have a great weekend and I'll see you next Friday. Take care.